Hi everybody and welcome back to the channel. So this is going to be an update on my dividend focused portfolio. The account value is at $26,157 and I have two different accounts, an RRSP and a TFSA, which I'm both building towards just building a passive stream of dividend income that will eventually pay some bills and then replace all of my income someday. So the market fell down on Thursday quite a bit, and we saw the S&P and TSX go down, and I took that opportunity to buy some stocks. But on the positive side, I'll be going through my dividends that I received for the month of August, and I also have news of 2 dividend raises that I received recently from some of the companies that I own. So Microsoft raised their dividend by 10%. I mean, this company's been doing phenomenally since I've owned it. It's one of the best performing stocks in my portfolio, and there's a reason that they can continue to raise the dividend each and every year, because they just make a ton of free cash flow and they can give that back to shareholders. And we can see that, they keep continuing to grow the dividend at a very nice rate. And I'm very happy with this raise. 10% raise definitely beats inflation, and it's a raise I did not have to, go to my boss and then ask or demand for a raise. It just happens with dividend stocks, so that's why I love dividends. And my second dividend raise is from Starbucks. So they raised their dividend by 7.5%. And this one has had a pretty good year and a pretty good performer in my RRSP. Definitely the standout in that account. Very happy with this company. And, they had about 12% revenue growth in their previous earnings report and 19% earnings growth. So no surprise that they're going to continue raising the dividend when the company itself is doing so well. For the dividends earned in August, my first one that I received that month was from HYLD, which is just my income-focused fund that is invested in only American companies. So you can think of it like an income version of the S&P 500. So that paid me $24.96, and I just reinvested that into more H-Shield. So we'll see that in September and every month going forward, this number is going to keep increasing, and I get this every single month. And I can just continue to buy this if this fund is cheap, or if I find a better opportunity, I could just reinvest that dividend. So it's really nice to have that flexibility with a dividend, the fact that you can continue to invest in the company that gave it to you, or if a better opportunity comes along, you think you can do better, or you find that the company issuing the dividend is not the best value in the market or the best idea at the moment, you do have that flexibility to put that money where you want. And if you are at the point where you have enough in dividends to cover your expenses, you can also just take it out and spend that money, normally. You just put that in your bank account and just spend it. ETHY is the next fund that paid me. So they paid me $2.30. So this is a Ethereum-focused ETF. So they just trade Ethereum, and it's a way to invest in cryptocurrency and get a dividend. I like investing in crypto this way because I like getting a form of passive income. I don't like having an asset sitting there, not providing any value, not doing anything, not growing. So this is my preferred way of investing in crypto, but it is extremely risky and hasn't worked out for me yet, just because I am down like 50% in this fund, but the monthly income does continue to come in. And Granite REIT paid me $2.51. So this is a newer position for me, but I'm trying to build this out, especially since real estate sector is not doing so great because of the high interest rates, although Granite is hanging in there a little bit better, and I only started buying it recently before the massive decline when it was in the 80 range, so we're only down in this one a little bit. So love getting a monthly cash flow from this, and they do raise the dividend as well, which is something nice to see in a REIT. And then with ENS, this is just a way to invest in Enbridge, but also use leverage and covered calls to enhance that income from Enbridge, because historically Enbridge is not a very good capital appreciation stock. The stock price doesn't generally go up, and I mean, even if it did, it wouldn't really help, because I'm trying to maximize income, so I figure, Enbridge is a very stable, boring, predictable business, and ENS is just a way to enhance the dividend that I receive from it. So that's why I stick with this. They pay me every month. Regular Enbridge stock only pays every 3 months, and regular Enbridge stock pays about a 7.5% yield. Right now, ENS is yielding around 12%, maybe a little bit higher. So definitely going to be reinvesting into this, as Enbridge did a acquisition, and investors are not happy because they issued some stock, and also they're taking on some debt to buy some natural gas utilities from Dominion Energy. But I think ultimately they don't do a lot of acquisitions, so I see this as a great opportunity to get more of the stock. Of course, do your own research, and don't just buy it just because I'm buying it. I could totally be wrong. It might be a disaster, but I think it's a great opportunity, so that's why I'm going to continue to buy it. And then with Smart Centers, this is another real estate company that I own. So this pays a higher yield. They don't really grow the dividend that much, but right now they're offering a 7.5% yield, and I received $9.40 from them on August 15th. So this pays me every single month. And then we have Apple paying us a dividend of $2.44 on August 21st. So Apple's great company. They just recently announced the iPhone 15, and the wait times for the Pro Max model is actually quite long. So it seems like there's a lot more demand for this iPhone versus previous generations, and I think I can mainly attribute that to using the new Type-C connector. So I am thinking that it's going to be probably the best-selling iPhone in a long time, if not the most best-selling iPhone of all time. So we'll see how that turns out, but always happy to receive dividends from Apple. Even though they're not very big, it is nice to see. And the last one is a dividend from Starbucks in the RRSP. So that was for $3.70, which I just reinvested right back into the company. In my RRSP, I just reinvest my dividends right back into what paid me the dividend. I'm just going to stick to that with that strategy, unless one of the stocks that I hold in there has run up so much that I just don't think that that's the best place to put the dividend. But for now, I think that Starbucks is pretty fairly priced, so I have no problem just reinvesting the dividend right back in the company. And if you enjoyed the video so far, please consider subscribing to the channel so you never miss any one of my updates on what stocks I buy and just any general news in regards to my portfolio and the companies I hold. So the TFSA is at 24,849. So from that Thursday sell-off, we are down $300 in a single day, or down 1%. And the past week has been absolutely brutal for the portfolio. We're down $958.67 and down negative 4% in the last week, which brings our all-time performance down to back in the red by $132 or minus 1%. But again, that's fine. I'm not really in any kind of rush with this portfolio. And in fact, it actually presents a great buying opportunity for us, as we can buy more stocks of companies we love and at a higher dividend yield, which will give us more passive income, and the dividends we receive are going to be more effective buying cheaper shares. So I see it as a positive. I get really excited when I see the market goes down. I would rather have the stock market go down for several years, which I know sounds very, very crazy, but if you're investing for the long term and your retirement is 20, 30 years away or even longer, you have plenty of time on your side. And the times when the market is down is a great opportunity to buy, especially if you have a long-term focus and a long time horizon. Then, a red day is an excellent opportunity. So you can see in my portfolio, Apple's doing very well, ATD doing quite well as well. So both are, well in the green. Both companies are doing well. Aritzia is probably my worst single stock pick at the moment. There's a lot of question marks around this company just because of how much reinvestment they have to make, and people are pricing in like a full-on recession, and they think that the clothing industry, luxury clothing, is going to really, really suffer. But they are going to have an earnings report very shortly, so we'll see if they can turn this around. I'll definitely be very interested in reading that report next week, and I could definitely cover that in a future video as well. For CNR, I actually purchased 2 more shares of this, going up to 3 shares total, because I saw it go down below 150. It actually jumped up to 156, so I kind of got a little discouraged because I only bought 2 shares at the time below 150, and then it shot up. So I thought I missed my opportunity, but the market pulled back again, and I decided to jump right back into it and continue getting more shares of this great company. So we're up to 3 shares of that. So it's coming along nicely. I definitely want to get a lot more shares of CNR. So I do hope the price stays beat up for much longer. And for this month's HYLD dividend that I received, I actually put that into 2 more shares of ENS, since it's has declined. It's been pretty steady at $15, but now it's at $12.50. So I'm actually going to be reinvesting my HEL dividends into this going forward for the next little while the price is beat up. I think it's just a great opportunity to pick this one up and get an over 12% yield. So very excited to have this opportunity to build out ENS, because it's just not been giving me any chance to buy it for quite a long time. And then with Granite REIT, I'm just continuing to put in small fractional buys into the company. So we're up to about 19% of a share since the last update. I'll be continuing to put in my little fractional leftovers from my account and small dividends, and just throw that into here, because it's definitely a stock I want to continue to build. And then with Intel, there's actually quite a bit of news regarding Intel. So it seems like they're going to have the process node lead in 2024. So they're going to have the most advanced chip in existence in 2024. So they should be the leader in terms of technology. And also they have a new announcement. The new chips they're going to design in 2024 are going to have better power delivery. So they're going to use a backside technology. Everyone else is using front side. And this is a way to drop the price of manufacturing the chips and increasing the power of the chips, which is great. And according to reports, it seems like TSMC, which is going to be like the main foundry competitor to them, will not be able to do the same thing until 2026. So that's quite a good innovation, and definitely an advantage for Intel to have a cost and architectural advantage. So it seems like they're going into the right direction. And they also have a very impressive Xeon chip coming out with 288 cores, which is just absolutely insane. So they're definitely taking AMD as a serious threat, but they also have some chips coming out with 3D architecture and chiplets just like AMD. So Intel is definitely not, sitting on the sidelines and waiting. I definitely see them being proactive, investing in the right things, making some exciting innovations in their business and in their transformation into a foundry business as well. Very excited about this stock coming up, and it only really had a sell-off because people were very happy with the latest presentation they had about their new AI chips and their technological advancements. But they said that cash flow would be not too exciting in 2024, so you might have to wait until 2025 or for Intel to start producing tons and tons of cash flow. But once that heavy investment phase is over, I think Intel is going to produce really, really good chips. It sounds like they're going to have a technological lead for a little bit. As long as they keep their foot on the gas pedal and they do not get complacent, they could definitely become a dominant market force going forward. And if they do have the most advanced process nodes available, they will take some clients from TSMC and take that for themselves. So Intel has a lot of potential to be a very, very big winner in the semiconductor space in the next 5 to 10 years. So that's why I'm still invested in the company. I'm very patient on this one because I see the long-term vision, and I'm okay with the short-term pain because I see a bright future ahead. And if you've watched the entire video, thank you so much for watching, and please subscribe to the channel and leave a like so more people can find the video. So for the dividends earned all time, I've earned $1,784.07 in dividends since starting the portfolio in February of 2021. And our annual dividends have increased from the previous update from $1177.56 to $1192.38. And our monthly average dividends have also gone up from $98.13 to $99.37. So I'm so close to my final goal of 2023, which is to hit $100 per month in dividends. So with just a few more deposits, a couple more dividends reinvested, I should hit that triple digit milestone in my portfolio of hitting $100 a month on average. I'm definitely going to celebrate that by going out and celebrating with family and friends. It's very important as you're investing to celebrate the milestones and the little goals that you achieve along the way, because there are going to be times in your portfolio where, you don't feel like you're making much progress, or you feel stuck. Maybe, you can't really contribute to your portfolio right now, but you should really stick to it and just set these little goals so you can kind of see the progress over time. Because, if you feel like the portfolio is not going anywhere and you're not really measuring it or tracking it with like a spreadsheet like this or some kind of a website to keep track of your progress over time, you can also track your progress year over year. If you feel like you're losing motivation, the main thing is just keeping that habit of investing going and staying motivated. So definitely do whatever you can to keep this a lifelong habit and to help you reach your financial dreams. Thank you again for everyone watching, and please consider following me on Twitter. So if you want to see what I'm up to in between updates, I definitely share what I'm doing, and I also share some market news on there, so please follow me on there. And if you want to start investing for yourself, please consider following my link for WealthSimple in the description below. And if you sign up and make a deposit, you can receive up to $3,000 for starting an account. And I would get something too, so you do help support the channel as well. All right, have a great day, everybody.